Hello and welcome back to Bunnex Investment Group. So this is lecture 2 in our order blocks free course that is following the first part, which was what are order blocks in forex trading. So to fully comprehend everything, I will advise you to first watch that video and then come to this one. So I've been searching all over the internet for these particular strategies that incorporates order blocks, but most of them are very hard nuts to crack. So you'd see that it's too complicated for someone to actually apply it in real markets. And as I always say, the strategy must be easy for you to put that much effort on discipline and patience. So without wasting much of your time, let's actually jump into the whole video. So the first thing in order for you to use order blocks is actually to determine trend. So as we all know that whatever we do on smaller time frames is trying to build up what we want to achieve on higher time frames. Please pardon my voice. I had a very bad flu over the past days, so it will be a bit bad. So what I mean is, the first thing or the first step whenever you want to incorporate order blocks in your strategy, you need to first see the higher time frame trend. So how do we define a trend? We are now in the basics of forex trading. So the first thing is to see where the crests of the market are being located. In this case, we can see that there are higher highs and higher lows, higher highs and higher lows. So what we need to see is break of structure. So break of structure is basically breaking of the last lower high. In this case, this was in the context of an upward trend, now changing into a downward trend. So in this case, we had an upward trend, and later we saw the market breaking the last lower high of the previous upward trend. Therefore, this is a significant sign that we have changed the trend. So whenever you see a pair changing the trend, it's now a jackpot for you, because you are definitely going to get high probability setups within that new trend. So where we locate the first order block is probably on the last candle of the last lower low creation move. In this lower high creation move, in this case we had a lower high at this point, and at that point, that is where we had the bullish order block, which is basically the last red candle body on that particular move. So now what we are now waiting for is to see the market come back in that higher time frame order block. So within that higher time frame order block, we will now require an H1 order block for us to participate in the markets, right? So in the H1, the move will now look like this, because it's now magnified. So this is where the H4 order block has been constructed, and we are now viewing the markets on the H1 time frame. So we said for us to participate within the markets, we now need a lower time frame order block. In this case, the H1 time frame will create an order block like that. So this becomes an H1 order block within an H4 order block. So if we see price coming back to retest this point, all we need now to see will be rejection of the market of that region. This is what we would like to see for us to go short, like that. So this is basically the simplified form of trading order blocks. The first step, we've said, is to determine trend on the higher time frame and to find a higher time frame order block. So from that higher time frame order block, we need price to come back within that higher time frame order block, and after retesting that higher time frame order block, we now need a smaller time frame order block. Like in this case, we constructed an H1 time frame order block. So let's go over the charts to see how this works in real markets. So this is order against the dollar, and as you can see from this point, right, we are starting our analysis using order blocks like always. So from this point, we had a push, a pullback, a push, a pullback, push, pullback, up to this point where we reached the apex of this particular move. So from this point, we can see that this was the last lower high of this uptrend. So breaking of this last lower high could actually mean that we are now in a new trend. So this becomes a very important point in the markets, because that is the point we are expecting to see the market to come back again. Then from there, we saw that the market, as it broke down, right, we saw it creating another order block. So we said the order block is actually the last candlestick within an impulsive move, the last red or green candlestick within an impulsive move, depending on its market context. So after having these two, it's now up to us to see which one is of high quality, and the quality can only be seen now on the lower time frames. So we are going to go on the H1 time frame to see if we are going to get a lower time frame order block that will allow us to make our entry. As we can see, this was the first time that I drawn on the H4 time frame. The order block for this move was issued here. This is the H1 time frame. This was the first order block on the H1 time frame within the zone of the H4 order block, but we did not get an entry. So the market went down. After going down, we had another H4 order block, and within that H4 order block, we now anticipated to see an H1 order block, and this was the last green candle going up. So in this case, what we were now waiting was to see the market come back to retest that H1 order block, give us rejection, and if you want to get a pristine trade, you can even go on the M5 time frame to find the M5 order block, which will be retested for you to get an entry. But in this case, even on the H1 time frame, rejection candlesticks on the H1 time frame can offer us an entry opportunity. Therefore, this was a valid point to sell the market. Then if we go back on the H4 time frame, right, we can see that we had this order block, right? It was the last red candle within this drop. Retest of that order block. Another, let me draw all the order blocks that we can see. Right, so this was another order block on the H4 time frame. Another one here, the last candlestick. Right, so what we are now interested in is to see how the market behaved when it got in these two order blocks. So we now go to the H1 time frame. When the market got here, we can see that we had this particular order block. which actually wasn't giving us an entry point. There was no entry point. At this point, the market attempted to reach the H4 order block, and it was also another point for us to look for an entry. Right? Therefore, there was a valid setup here. Then we had another H4 order block here. We had to wait for the market to come back to that H4 order block and give us an H1 order block. Therefore, another entry point was going to be at this zone, and we were going to short the market. So as I've said, the first thing is to find H4 order blocks. After finding H4 order blocks, we now go to the lower time frame when the price reaches that H4 order block to see if we can get a lower time frame order block. Let's just have another example on another chart. Euro US. So the first thing when you get to the charts is to start on the higher time frame. In this case, I'm going to go on the H4 time frame. Right? What can we see from this move? We can see a low that was created at this point, right? Break of structure, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So in this case, what we can see is the market is now in a downward trend. So we were going to see that after break of the last lower high. So break of the last lower high was going to give us the bias of the market that we are now in a new trend. After that, we now had to draw our order blocks. So in this case, what was the last red candle? Right, from this point we can see break of structure. After break of structure, this was the last candlestick in this particular flow. So it's an H4 order block. An H4 order block. So if we go to the H1 time frame, we now need to find an H1 order block within that particular H4 order block. So that's how you would be trading. You first determine trend on the higher time frame. After a determined trend, you come down to the lower time frames, and after coming down to the lower time frames, you look for an order block. So in this case, what was the last candlestick? It's this one, last green candlestick, which was the bearish order block, right? Protruded in the future to see rejection of the market when it reaches that particular point. So this is how you'll be trading using order blocks. Attain order blocks on the H4 time frame, go to the H1 time frame to look for H1 order blocks and trade off rejection of that particular H1 order block. On that note, we come to the end of this video, and we'll meet in another session where we'll be talking about which exact order blocks will you be looking at, or which order blocks will definitely hold when trading them. On that note, please check out our free Telegram channel. The link is right down in the description box below.